Okay, traders, welcome back to the Price Action Labs YouTube channel. So I've had a few requests about the greatest ICT tool on the market right now. So this is the Power of Three, and I'm going to be going over a Power of Three masterclass and how you can be using Power of Three in your trading. So this is going to be a series of videos, one by one, where we're going to be breaking down how to use the Power of Three. The Power of Three is actually very simple, but the number of traders who mess this up is truly alarming, right? So if we have a bullish day like this, we're simply looking for an open, and we want to see price come below the open, and we're looking for the low of the day below the opening, and then we're looking to trade from this. Now, the real secret comes into understanding that you're looking for a fair value gap to trade higher from. That is the main secret that all the traders miss out, right? Just like this from the sell side point, you're looking for an open, you want to see price expand above the open, you're looking for the high of the day somewhere above the open, and then from here you're looking at a fair value gap to potentially trade lower from. Now from here, there's two time frames that I use a lot in my analysis when it comes to the Power of Three. So the first is I look for the daily Power of Three. So in particular, I'm looking for the daily open. So the daily open is New York midnight opening price. So it's midnight at New York time. So it's New York or Eastern time midnight. The second Power of Three I'm looking for is the 10 a.m. Power of Three. And they're both very powerful. And when you can align a trade where they're both in line, so for example, you want to be buying below the daily and the 10 a.m. Eastern, and you want to be selling above the 10 a.m. and the daily Eastern. These are the most powerful trades that you can take, right? So we're going to be going over an example over here. Specifically, we're going to be going over a bearish example, right? So we're going to be going over a bearish example. So what you're looking for, if we just draw this out, is you're looking for price to open and you want to see price expand higher. Then you want to see price give a market structure shift to the downside. Now, when you're looking for shorts, you only want to be trading off 15-minute fair value gaps. So what's really happening here is you're looking for price to come into this area, react off this 15-minute fair value gap, and then head lower. Everything is above the opening price. So this is the opening price. We're looking for everything above the opening price, right? So in order for you to catch the high of the day, where I see traders going wrong is that there's a few things. First of all, they don't trade off the right fair value gap. And the second thing is they don't use volume and order flow to determine where that high of the day is going to be. So if you're not using volume or order flow, you're setting yourself up to fail because you don't actually understand who is in control between the buyers and the sellers, right? So with that being said, let's just take this to the charts right now. So this is ES on the 15-minute time frame. So where do we look for, right? What is your main entry model? How do you approach the charts, right? So if we just kind of take price back a little bit, right? This is now the start of the session. This is 9:30 a.m. Eastern. So when I come to my charts, I am looking for 15-minute fair value gaps. This is step number one to my entry model, right? So I am looking for 15-minute fair value gaps. Why are 15-minute fair value gaps so important? Well, the reason for that is because 15-minute fair value gaps give you supply and demand zones, right? So 15-minute fair value gaps give you supply and demand zones. So let's just zoom into the price action and see what we had, right? So we actually had a 15-minute fair value gap resting over here. So this was our supply area. This was our supply zone just over here, right? So for those who can't see this, we have a small fair value gap over here, and our supply zone is going to be this buy to sell area just over here. This is what's important to understand, right? So why was this a high probability zone? Well, there's a few reasons for that. If we just go over to the left, what we can see is we can see price actually came into this fair value gap from the left, right? So we saw a bullish fair value gap over here. If we just extend that over to the right, we can see this is a demand to supply flip zone. So what this was, this was an area of demand which tried to drive price higher because demands tried to drive price higher, then we fail. So this is essentially a flip zone. Just for context, when you see a flip zone, this is a better zone to be trading from. So this is step number one. We've analyzed 15-minute fair value gaps, right? We've analyzed things on the 15-minute time frame. The next thing we're going to look for is a lower time frame entry. So typically my lower time frame entry will be the 5-minute time frame. You can use the 1-minute time frame as well if you want, right? So that's the second thing we look for. The third thing we look for is the order flow, right? The order flow is the third most important thing, and people always mess up with the order flow. But the question is, where does the Power of Three come into all of this, right? So the Power of Three comes into this with the following. So I often get questions about what the indicator is. So this is the Power of Three by 2 degrees. So let's just type that in on the indicators. What you want to do is you want to type in PO3, right? And you want to get this one over here where it says 2 degrees, right? 2 degrees over here. Get the one that's not locked. Get the free one over here. This is the higher time frame Power of Three. So once you have this in place, from here it becomes very, very simple. So your settings for the Power of Three need to initially be the daily time frame, right? This is the daily time frame. So let's just kind of see what's happened. So we have this fair value gap from the previous day over here. So now when we play price on, what's happening over here? When we come in, sorry about that. When we come into the market open over here, price now opens up. And what we're looking for is we're looking for the nearest fair value gap to trade from. This is the most important thing, right? So let's just try and take price back one more time. So the market opens down here. Let's go to the 5-minute time frame, right? So this is our key level, 15-minute fair value gap. Already from a power of 3 perspective, we are significantly below the daily opening. So this is the daily opening. This is New York midnight opening price. This is midnight Eastern Standard Time, right? So whenever you're looking to sell, you want your sells to be above this, right? Your sell should always be above this, right? So you're looking for a reaction of this area. Right, so what makes this reaction high probability? Again, we're at a 15-minute fair value gap and we're above the daily opening price. So I want traders to understand whenever you're looking for sells, you ideally want to be above the daily opening price and you want to be in a 15-minute fair value gap. So we're above the daily opening price. I'm just going to write DOP and we are in a 15-minute fair value gap just over here, right? This is what we're looking for. Now, once we have that in place, the next thing is to simply wait for your entry, right? So I made a tweet yesterday and I want traders to understand it is patience that's stopping you, right? It's your patience that's stopping you from executing good trades, right? Because there's no need to catch every move. There's no need to catch this move on this pre-market move and this move up here, right? Once you have a key level and you know exactly what to look for at key levels in relation to the power of 3, you just got to wait for your entry model, right? You just got to wait. Now on the 15-minute time frame, again, we established this area to be a demand to supply flip. So it's a high probability trading condition, right? A high probability trading area. So once we have that in place, let's continue to play price on, right? So as price comes into this zone, we've now tapped into this zone. Now that we've tapped into this zone, we can begin to analyze the second form of power of 3, right? The second form of power of 3, right? Which is now on the 4 hour, right? So the 4 hour is what I use for intraday. So here we have the 10 a.m. Eastern. This is important to understand. This is the 10 a.m. Eastern, right? So when I'm in session, what am I looking for? So when I'm in session, I'm only looking for a few things. I'm looking for number one, has price tapped into a 15-minute fair value gap, right? So first you're looking for a 15-minute fair value gap for entry. This is the most important thing. The second thing is, has price actually gone into that 15-minute fair value gap? This is a supply area. Is price in the zone? So you're looking for a lower time frame entry, right? A 5-minute or a 1-minute. For this video, we're just going to use the 5-minute because there's a slightly clearer entry on the 5-minute. Now the third thing, and this is where people mess up, is the order flow. So the order flow is what will confirm whether your power of 3 is actually correct, right? Because you don't know without reading the order flow if price is going to melt lower or if price is going to melt through. You don't actually know what's happening in this area. And step 3 is why so many traders go wrong in the first place. So now we have ticked off step 1. So we have a 15-minute fair value gap. That's tick. Step number 2 is we're looking for a lower time frame entry. Now step number 2 is where you can combine the power of 3, right? Because we have the 10 a.m. Eastern. And we're above the 10 a.m. Eastern. Sorry for that. We're above the 10 a.m. Eastern. So when you're above the 10 a.m. Eastern, you want to be looking for sells. That's just a hard fact I want people to understand. So now from here, what we're looking for is the 5-minute, right? So what do we look for? How do you look for a change in state of delivery? Because the change in state of delivery is what order flow actually is, right? I see a lot of people talking about the CISD. CISD, change in state of delivery, right? What this really means is you're looking at two things. You're looking at the delta and you're looking at the volume. So these are the two things that you're looking for, right? So this is where you need to use a little bit of, I guess, common sense, right? So when we come into this 15-minute fair value gap, I'm going to label this as a 15-minute fair value gap, right? So when price comes into a 15-minute fair value gap, you want to know if this fair value gap is actually going to hold. And the way we do that is by understanding a few things. We do that by understanding who is in control between the buyers and the sellers. So if we just continue to play price on, we want to understand and really analyze what is going on inside of this particular area. So we are looking for this position over here. This is the most important area you're looking for. So now from here, let's head over to the footprint chart. Okay, so here on the ATAS platform, right? ATAS, this is Advanced Trading Analytical Software. We have the exact same price action over here with the exact same key level. So now when we go on the 5-minute time frame, we're going to be looking at this side by side with the candlestick chart, right? So this is where we're looking at the order flow inside of the key level. Again, we're above the 10 a.m. Eastern. So when you're above the 10 a.m. Eastern, let's make this super clear. So when you're above the 10 a.m. Eastern, what you are really looking for is you're looking for buyers to fail. So how do you look for buyers to fail? This is what's super important to understand, right? How do you look for buyers to fail, right? So if we just take this in line with the candlestick chart, what we can see here when we look at the order flow in a lot of detail, we can actually see the following, right? We're reading the numbers. So the right number on the right is going to be the ask. The left number is the bid. So what you're looking for is we're seeing a lot of blue over here. We're seeing a lot of blue over here. So if we read a few numbers, we see, for example, we see 188 for 401. That represents this candle over here, right? So if we bring this up again, this is 188 for 401. So that's roughly 2.5 to 3 times as many aggressive buyers as there are aggressive sellers, right? So even over here, we can see significantly more buyers, aggressive buyers than aggressive sellers, right? Important that you're reading the word aggressive. There's not more buyers than sellers. There's more aggressive buyers than aggressive sellers. So for example, if you look at these prices over here, 57.78, 57.80, round about the 57.80, 57.79 area, there was significant buying volume, which mean that which meant that there were more market participants hitting the ask, which meant the ask volume was of course higher, which means that buyers were aggressive. Now, are they in control? This is the question, right? We're seeing a ton of buying volume step in. We see so many buyers over here. Again, we see over here 0 for 27, 87 for 238. So what we're seeing over here is we're seeing so many more aggressive buyers and sellers, but the market broke below this zone with aggressive sellers. So what's actually happening over here? If we go back to the candlestick chart, right? We've seen just over here, we've seen the following, right? We've seen here in this region a significant number of buyers. Just over here, a significant number of buyers. Here, there was a significant number of buyers. So when you're looking at the power of 3, right, we're above the 10 a.m. Eastern. So how do you know that the candle has given the high at 10 a.m., right? How do you know that this was at, what time was this? This was at 10:15. How do you know at 10:15 the 4-hour high candle was actually going to form, right? Because this candle produced the high over here. How do you know that? Well, you're not going to know it without looking for the correct CISD, right? So you're not going to know that without understanding that there's so many buyers in this region and there's so many buyers in this region, right? Even coming into the zone, we had so many buyers. We had 18 for 180. That's a 10x. There's 10 times as many aggressive buyers as there are sellers, right? But when we look at the zone actually held. So what this tells you about the zone is that there's so many aggressive buyers, but none of them were rewarded. So the zone itself is strong because there's sellers sitting at this area. It is a strong supply because aggressive buyers have been absorbed by passive sellers, right? This is the most important thing to understand, right? So we have tons of positive delta. So when you have positive delta, the positive delta just means that buyers are aggressive, right? Buyers are aggressive. But have these buyers been rewarded? Well, if they were rewarded, they would have broken the level. So the level is strong. It is a strong level to be trading from. Now from here, let's confirm the rest of our CISD, right? So what we're looking for now is we're looking for a minor break in this region, right? So this is your break, and this corresponds to your exact entry. Again, if we look at the candles over here and what was actually happening in terms of price, what we saw is we saw buyers step in over here, the buyers failed, and we actually saw sellers drop in over here. So we had significant buying volume over here, which swapped to significant selling volume. So this was the candle that showed the shift in the order flow. This is the CISD, right? This is the CISD that you're looking for. So now that you have that in place, you can take an entry just over here, stop loss just above this candle's high over here, and you're simply looking to target, if we just go down to the 1 minute time frame for targets, you're simply looking to target the first fair value gap below the 10 a.m. Eastern. So this is the 10 a.m. Eastern, this is the first fair value gap below the 10 a.m. Eastern. So you're simply targeting this area over here. So if we just continue to play price on, we're looking for this target, and this is a nice, I believe it was a 1 to 3 risk reward, right? 1 to 2.5 risk reward using order flow and the power of 3, right? So if we just go back to our original drawings at the start, right? What you're looking at here is you need to understand a few things. When you're looking for a sell, right? You're looking for a sell above the 10 a.m. and the daily opening. That's exactly what you had over here, right? If we just take this away, what you're looking for is you're looking for a sell. So we had a sell roughly in this region with the stop loss above here, and we're simply targeting liquidity down here, right? So what's important to understand about this sell is a few things, right? You want to be above the daily opening price. You want to be above the New York midnight opening price. You want to be above the 10 a.m. Eastern, and you want to be inside of 15-minute fair value gaps. This is how you master the power of 3 using some simple concepts, right? So we're in a 15-minute fair value gap. prices reacted off the fair value gap, right? The most important thing, of course, is to understand what is going on inside of this area. And this is going to be the last thing I break down in this video, right? So when you're looking at this, right, this yellow box corresponded to a large amount of aggressive buyers. Aggressive buyers stepped in over here, aggressive buyers stepped in over here. In fact, when you read the candles, you see 87 for 238. So there's significantly more buyers than sellers, aggressive buyers than aggressive sellers, but none of them were rewarded. And that's the reason price melted down in the first place, right? So using order flow and ICT is the most important thing. And you want to use power of three as the glue together, right? So you want to be selling above the New York midnight opening price and 10 a.m. Eastern off 15-minute fair value gaps, and you want to see buyers trapped, which shows you sellers are in control, right? So if you like this video, give it a like, give it a thumbs up, and I look forward to seeing all of you in the next one.